Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner. This is our warts and all real-time, real money trading show. More all than warty at the moment, it must be said. And I'm joined, as always, by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, we'll get to in fact, the stellar performance of the portfolio to date, but that will be for the end of the show. But let's start off with a share trade, which is one of the most recent for the portfolio. It was a long on PSG, and it looks like it's worked out nicely.
Yes, it certainly has.
Out nicely.
It's working out. We're still in it, and it's certainly working out very, very nicely for us. We got in at a good level, and this was one of those trades that worked basically from the moment we put it on. And I often find those are the best trades. When you put a trade on, it works immediately. You know, generally speaking, you're onto something good then, and it's worthwhile hanging on to it for a bit. If we have a look at the chart of PSG that's up on the screen now, what I'd identified was that we had this very well-defined upward trend, which goes back a year now. And you can see all the low points that joined over the last year to form that upward trend. And it pulled back beautifully right to that support level, which is at 92 Rand. There was additional support as well in the form that we've had the stock trading into a sort of a large downward channel over the last 2 months, which is a nice healthy consolidation. And the bottom of that channel also comes in at around about 92 Rand. And then of course we've also got this lateral support level, which has been a pivot point of a number of highs and lows over the last couple of months as well. Also coming in at 92 Rand. So we had a very significant area of support there at 92 Rand. So what we did last week was we bought 2,500 CFDs for our portfolio at 93 Rand 20, and we set a stop loss at 91 Rand 30. You'll recall that what was interesting here was that the company recently raised new capital. They issued almost R1 billion worth of new shares, and they placed those shares at 95 Rand. So we saw the 95 Rand area being fairly well supported, and then all of a sudden the stock dropped below that level last week, and we saw a large amount of volume trading in the share, which was very interesting to note. And that was when we bought the stock. I spotted that volume spike. I also spotted the fact that we had this big area of support at around about 92 Rand. So I bought on the reversal off there. What it turned out later, after we had actually recorded last week's show and I had done this trade, we then saw the next day a SENS announcement to indicate that we were in rather good company when we bought those shares, because Yanni Mouton, the Boer Buffett, was also buying shares. He bought 47 million rands worth of PSG stock at that sort of area where we were also buying. So clearly we were in very good company. And you know, interestingly, he never sells. He buys these shares in his company, but once he's bought them, he pretty much sits tight. So I think it's quite a nice vote of confidence. And I think given that, you know, to me, that gives me confidence to hang on a little bit longer as well. Also, you know, just purely from the technicals now, and ignoring all of that, you know, we've got a breakout through the top of that channel over there, which in itself is an encouraging sign. And I think that the likelihood of this share now going below our stop loss is actually extremely remote from these levels. So I get the feeling this is one we should probably try and hang on to for a little bit. Remember also that we had a really good potential risk to reward ratio on this trade.
It was 1 to 9, wasn't it?
Yeah, it was 1 to 9. If that's assuming the share can go back to its prior high, which is about, 110 Rand. You know, our stop loss was pretty tight on this, and because we've got that really tight stop loss with a fairly nice upside, it gives us a really excellent risk to reward ratio. So I think this is one of those shares we must look to try and hang on to for some time. I don't think we need to rush for the exits here.
Okay, so even though it's worked out quickly, which is the kind of share that you like to trade in, you would actually stay invested for a slightly longer period than maybe you would ordinarily?
I think so. I think that's probably the way we'll look to trade it. I mean, look, obviously we'll monitor it from 1 week to the next and see. But to me, this is the kind of stock that we got in at an excellent level. Yeah. The likelihood of that stop loss being touched, I think, from here is very, very remote. So on that basis, I think there's merit to actually sit tight here and try and run the profit a bit more.
Yeah, and it has been sometimes quite difficult this year to run profits in trades because it has been uncertain. Well, the market is always uncertain, let's say that. But all right, Garth, so that's PSG working out very nicely indeed, and as you say, in good company there with Yanni Mouton. What about this trade and Exaro? It was a short position, and unfortunately, it's quite the opposite, isn't it? It hasn't really done much since you entered the trade.
No, it hasn't. We're slightly on the right side of this trade still, so it is working, but it's just really kind of grinding. Anyway, look, let's have a look at it. What I'd identified here was that we had this huge, big descending triangle structure. This bottom, this flat area of support at 137 Rand here, I'm still convinced that that support will give way at some point. We've got a series of falling highs over here. What's notable, if you think about the trading action in what forms a chart like this, is that each time the stock rallies, the sellers come in and they sell the stock down from a lower level each time. Yes, there's support at 137 Rand, but the buyers are not strong enough to push it up to start making higher highs. So there's still lower highs. So I think if you've got to look at the balance of power in here between buyers and sellers, it's pretty clear to me that the sellers have the upper hand here. And the likelihood, therefore, is that it will break to the downside. Of course, something could come out of the woodwork elsewhere, could break our trade and force a stop loss. For example, if they came out and just announced a sale of their Tronox business or something.
Which
by
I
and
doubt,
large, I doubt it, but I doubt it, although I've read sort of something to that effect recently, but I do doubt it. I think the only thing likely to probably push this share up, I would think, is a short squeeze. If that happens, you know what, we'll get out and we'll relook at it at a later stage. But we short 1,300 CFDs here from an average price of 140 Rand, and our stop loss is at 144. So I'm going to stick with it for the time being. I'm still relatively confident that we will see this share breaking down below the bottom of that support sometime. When I've seen these patterns in the past, they invariably always break to the downside. Yeah. So I don't know why this one should be any different.
I mean, you talk about the stale longs. Do you get a sense that there are a lot of short sellers in Exaro, that there might be a short squeeze?
It's possible, because every now and again I get a report to indicate where there's scrip shortages in certain stocks, and from time to time Exaro does pop up on that list, indicating that it is a fairly widely shorted stock. And the problem is when you start seeing that, when everybody's on the same side and there's lots of short exposure, that does increase the potential for a short squeeze if there's a recall of scrip. So we just need to monitor that.
Okay. All right, Garth, so those are a couple of the open trades. I know you want to have a look at the top 40 this week, and we seem to have, well, we have wobbled today, and I'll kind of wonder if the correction is coming.
Yeah, well, we've been wondering about this looming correction for about 3 months and about 3,000 points now. So I don't know. I'm beginning to get wary of trying to pick the top in this market. Not that we've been trying to pick the top. I mean, we've got inadvertently we've got short exposure via our options structure, which is quite nice. So we're in there, but if we can't get squeezed out if the market keeps on rising. Anyway, let's have a look here. What's quite interesting to note is that there are certain vulnerabilities starting to pop up on this chart of the top 40 now. I've shown a relative strength index as well as a stochastic oscillator here. Those are both momentum indicators here. Now take a look at this chart and look back a couple of months now. This was January, where we saw a reasonable correction in the market. We actually traded that correction quite well for the show. What you get here is what's called negative divergence. So your price on the index makes a higher high, but what is happening with the oscillators is that you're making a lower high each time. That is telling you that the momentum of that upward move is starting to slow down. And often that slowing momentum precedes a change in trend for the short term. Yeah. Right? And you can see that that certainly worked well that time. We did see a fairly nice little pullback of about 4 or 5%.
Yeah. I mean, these are corrections in a long-term uptrend, so yes. it's not a
we're not talking about a collapse or anything like that. We're talking about just a pullback in the market. So that was then. We saw it again in February, March of this year. Once again, the price made a higher high, yet your stochastic and your RSI made a lower high each time. And that also preceded a brief little pullback of about 1,500 points on that occasion. Now we sit in a situation where, again, we've got a similar situation or similar setup happening. We've got very clear negative divergence on our RSI, whilst the price of the index itself is making a higher high. Also, what is notable right now is that the RSI is given a sell signal, and that is where your RSI crosses above 70, indicating that it's overbought, and then it crosses back down underneath 70. That crossing down below the 70 level is an indication, that's a sell signal in terms of how the RSI works. So I think given that, it certainly does warrant some caution at the moment. You know, we've been running up very, very hard. We are overbought. We are showing negative divergence, which is something to be wary of. So on the basis of that, I'm not doing any new trades this week. I'm not going short either, because we've already got options in place which kind of give us a downside exposure. So on that basis, I'm not doing any new trades. I think this is just worth noting because it does, to me, suggest that we are fairly vulnerable to a bit of a pullback in our market now.
I mean, and the other thing, technical indicators aside, is the action that's been happening as far as company share issues and book builds. And it's been really fascinating to see in the last, probably 6 weeks or so, a lot of big, savvy companies going to the market to raise capital. You know, these guys, they know to raise capital when the market is strong and possibly soon to turn, rather than at the bottom when they can't get very much for their shares. I mean,
no, absolutely. I mean, we've seen PSG raising, we mentioned it earlier, nearly R1 billion of fresh new capital. Steinhoff last week also issuing 350 million new shares. Massive capital raising there. We've got Alexander Forbes coming back to market, relisting. It was delisted a number of years ago. Now it's coming back, it's relisting. You know, these are 3 companies run by exceptionally clever people. And clearly, they see the market as being fairly rich at these levels, and therefore, you know, issuing equity now is a relatively cheap source of funding for them. And it's interesting to note that we're getting all of these new issues of shares coming out around about this time. It does, you know, certainly you can't pick a top based on that kind of behavior, but it does tell you that the market's probably quite rich at these sort of levels, that you know, the companies are doing that.
Yes, and I sort of wonder if we're all patsies for buying in. So on the one hand, you've got the market, you know, you see it unfolding before your eyes, and you say, well, you know, clearly these companies are going at a really optimum time for them, and yet why is everyone buying? That's what I find quite interesting.
You know what, this kind of behavior is repetitive. It happens over and over. And you go look at, you know, prior bull markets, you'll find that the same characteristics exhibit themselves over and over. And towards the mature stages of a bull market, you'll find a lot of new IPOs coming to market. You'll find a lot of new equity being issued and so on. And I think it's Donald Gordon who was famous for doing a massive capital raising just before the 1987 crash. So, you know, this kind of behavior does repeat itself over the years.
Oh, well, we should look back to our history. Garth, I mentioned at the beginning of the show that it was more all than watery to look at the state of the portfolio, and it's looking very healthy indeed. Yeah,
it is looking healthy. We're at a new high for the year now, 334,000 Rand almost. So that's up 33% for the year to date. You can see what's really done it for us this week has been the position in PSG. We're up 13,000 Rand from last week when we initiated that trade. So that's working beautifully. Exara, we are slightly on the right side of that trade. And then we've obviously got our option structure sitting in the background there, waiting for a market correction, which might or might never come. We don't know. But if it does, at least we've got some downside participation there. But nice to see the portfolio sitting at a new high. And also we're halfway through the year. So we've got about
5 months, 7 months through the
We've got about another 5.5 months worth of trading left in this year. So, you know, we're sitting at a very good situation right now. We need to also obviously try and make sure we can keep it up in the latter half of this year now.
Let's not blow our trumpets maybe too soon. Garth, and then to end off, what upcoming courses do you have? I suppose the last of the recent high probability trading courses.
Yeah, the last of this series for now anyway. I'm in Port Elizabeth this week, Thursday and Friday. I'm running a CFDs course on the Thursday night, the 10th, and a high probability trading course all day on the 11th of July. There are still a few places available, so anybody in the windy city that would like to participate, welcome to email me and I'll send you the details. And we're also running a face-to-face session in Johannesburg on the 31st of July, which we'll talk about more. But if you want to book on that, go to traderscorner.co.za and you can book to attend that face-to-face session as well.
Okay, great. Good luck with the course this week. Garth, we'll chat to you next week. Thanks as always for joining us. That is, of course, Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.